Hey everyone, welcome to the KE Report and a company update from Kuya Silver. Chatting with the president and CEO David Stein. We're going to be recapping the most recent news release from July 15th, reporting Q2 production growth. We're going to be talking about that production growth, where development stands right now, also the move to the goal of at that 100 tons per day, as well as talk about some of the nuances within this production and revenue numbers. Kuya Silver is traded on the CSE under the symbol KUYA, on the OTCQB under the symbol KUYAF, and the Frankfurt Exchange 6MR1. David, let's recap that news. Let's start off with the production growth. You almost doubled over the quarter in Q2 2025, up about 87%. That's production of mineralized materials. This is all coming from the Bethania Mine in central Peru. David, take us through how this is progressing again with that whole target of 100 tons per day, please.
Sure. Thanks, Corey. And we've kind of set that initial target of 100 tons per day because it's definitely a critical mass for us and for this mine. You know, we should be breaking even, if not slightly profitable, given the higher silver price at that level as well. And so we're working our way up to that. So we made good progress this quarter, got a lot of good development work done underground. You know, as you're ramping up a mine, you're sort of doing a number of jobs at once. So you're doing essentially additional development to open up more working areas and, you know, whatever else needs to be done to basically connect all the pieces together underground so you can keep increasing production. But at the same time, we're also doing, you know, normal daily production as well. And so we've been able to put more resources in the last quarter into development. That's gotten us a lot further towards our 100 tons per day. So we've got pretty good visibility on pretty good high confidence level that we're going to meet that this quarter. So we're happy. The team's doing a great job. And with that being said, we're still in the relatively early days of the ramp up. So we want to give the market a lot more, keep staying tuned because there's a lot more to come and the numbers are just going to keep getting better and better.
So can you explain this balance between the production of mineralized materials that increased 87% over the quarter, and then the development increases that was 63% in terms of development meters? How do you balance these two out as we look ahead here?
Well, you know, there's different ways that you can develop a mine, an underground mine. I mean, one way you could, in theory, just do only development and stockpile any ore that you happen to run across as you're doing the development, but really just focus on developing all the tunnels, all the adits, all the ventilation, et cetera, that you need to get, and then one day flick a switch and just start, you know, producing. We chose not to do it that way. We frankly felt like we needed some cash flow to offset the costs, and so the way that we're doing this is more of a slower, gradual ramp up, where we're putting, you know, some of our resources, some of our people into mining, and then some of it into essentially growing the size of the mine underground, developing more working faces, so we can grow into that 100 and eventually 350 tons per day. So that's kind of the balance, and it's a call. Not every mine's the same, but that's how we've decided to ramp up, and you know, and as I said, it's been working very well for us.
You mentioned those working faces, and it's noted a couple of times in that news release that right now you have 10 operational faces as of early July. You say 9 are required for that 100 tons per day production rate. Explain what these working faces are and how this rotation will happen to keep it around this number so that you can maintain that 100 tons per day when you get there.
Sure. So just to be clear, only 4 of them are actively in production right now. The remaining ones are prepared, and that'll be part of the job over the next 1 to 2 months, will be essentially to get those into production. And that's how we'll essentially ramp up to 100 tons per day. So, in our case, every face of the rock that has mineralized material that we can essentially, mill and sell, the economic material for us, we consider that a working face. the simplest way to think, the simplest type of working face is obviously the stope, where you're gonna stay there for a while and mine a lot of material. But in an underground mine like what we have, which using the ascending cut and fill method, there are other parts of the development where we actually find valuable material, vein material as well, where we're developing into vein material. So some of those examples would be the drifts that essentially the horizontal drifts that connect all the stopes together. Those usually have mineralized material in them. The sublevels basically right underneath the stopes. The raises that we use to move levels and also for ventilation, sometimes those have mineralized or vein material in them. So there's a number of different things that we come across, and all of those are considered to be working faces for us, which all add to the total number of tons that we can pull out of the mine at any given day. They obviously don't last forever because you mine them, so you have to be developing new ones all the time. So that level of 9 or 10 gets us to 100 tons per day, but obviously we need to get to somewhere between 20 and 25 ultimately is what our plan would be. And of course we've got 2 other veins we're not even mining yet, big vein systems where everything that we talked about in the press release is all on the one Espanola vein at the moment, and all at one single level. So there's a lot of places for us to develop into, and that will be what we show the market over the next number of quarters.
So when we're looking at future news releases, what is maybe the critical thing to understand? Is it the production of mineralized material? Is it the continued development growth? Or is it simply how many mining faces you have to you?
I mean, honestly, all 3 of those things are valuable to keep an eye on, because if you produce a lot of material, vein material, but you haven't developed the working faces for the next month or the next quarter, then you won't be able to keep that up. So obviously, like the most important thing is probably the number of tons that are mined, because that directly impacts revenue and cash flow. But it's definitely good to keep an eye on how development's going, and I mean, I would imagine once we get to a steady state, people will worry less about it. Frankly, they'll just trust us that we continue to develop the mine, because it becomes a bit like a factory at that point where you're doing the same thing day in, day out. But between now and getting to that initial target of 350 tons per day, what we would call our phase 1, there's a lot of, I think, very interesting stuff going on, and it is interesting for me to follow, for me to track what's going on, and I'm sure some of the investors as well.
Oh, it's a lot of the questions that I get is how is this development or the increased production advancing? But that's why I think it's important to really isolate these different terms and what they all mean. Let's also talk about this toll milling aspect, because it is a nuance in that news release that there wasn't any availability at the toll mill, so no material was processed in Q2. That means you didn't generate any revenue, but you just ended up stockpiling this material. It says that toll milling resumed in early July. Explain what happened here.
Yeah, it was partly due to scheduling on our end, and partly due to the mill. We did a big batch, big for us, right at the end of March. So we weren't scheduled to do another batch until probably later in April, and then the mill wasn't available for us to produce that material, and so we just stockpiled it, and it's worked out fine. And obviously something that we don't think is a big long-term issue, but these are things that can happen with toll milling. And even if you own your own mill, sometimes you have to shut it down for a month for maintenance or whatever. So these things happen. We have enough working capital. It's not an issue. And in this case, it actually worked out in our benefit, because we're now processing and selling our silver at $37, $38 an ounce instead of 33, which is what it was earlier in the quarter. So in this case, it's worked out well, but definitely something that is part of managing a mining operation like this.
Do you have any information on the stockpiled material then? How much you have stockpiled, either tonnage or toll milling feed time frame?
Yeah, I think we had something like 1,200 and something tons at the end of the quarter, and then we've kept mining in July too. So we're just keep adding to that pile. So yeah, we have complete use of the mill right now. So we're gonna do a big long batch with them here in July and basically catch up for the material, for what we didn't get in Q2, and then it should go back to kind of normal after that. But the exact inventory and the value of it will be on our Q2 financials, which will come out in August.
Okay. That'll give us a number to look at then. One other thing that stood out to me in terms of this production table that you have in the news release is that the average head grade was higher for silver, lead, and zinc across the board, higher than Q1 of 2025 and much higher than 2024, what you mined then. Explain to us what's going on here. Is this to be expected, continued grade increases?
I mean, I don't think it'll go much higher than this, than currently. When you start up the mine, you kind of don't have choice of where your ore is coming from. So you just take what you can get. And then as you get more and more development, you can be a bit more selective as to where you take your ore from. So we're in the position now where we can, focus on, some of that higher grade material. So some of it is within our power. And then there is also a bit of a natural up and down in the grade of a vein. And that, that happens at every vein mine in the entire world. It's not like a uniform thing. So the grade goes up and down. It also pinches and swells, so it gets wider and then thinner. And, you just sort of have to adapt your mining around that. So, yeah, I mean, I think we should be somewhere in this, in this range of grades going forward. We obviously want to keep the grade up as much as possible because, we make more money that way.
Yep, makes sense. Now, I want to go down to the bottom of that table, the revenue numbers, because there is over $1.1 million US recognized in Q1 in terms of revenue that came in. But this wasn't from Bethania. This was from your Silver Kings project in Ontario. What happened here?
We found a pile of concentrate material, silver concentrate. It's been there the entire time we've owned it, and we ran a process to see if we could find a buyer for it. We knew that it was pretty valuable, and obviously with the silver price going up, it made the likelihood that it was saleable better. So we ran a process. It actually took us quite a while. I think from start to finish, almost 9 months, 8 months. But we finally got it shipped and sold in June. And yeah, just kind of a little bonus where, just show that we're creative. And obviously it's the geology and the mineralogy of the Silver Kings area is very unique. So it was not necessarily easy to find an end user for that, but we did. And, we're obviously happy to get that kind of free cash flow that no one was expecting, including us a few months ago. And obviously it's non-dilutive, which is great because everyone is focused on that. And, it's not something that we should expect going forward. We do have a pile of crushed ROM material there as well from a previous operation that could be economic if silver prices go significantly higher. It's about a third of the grade of our concentrate, so you'd probably need, $60-$70 silver, and then you could look at just selling that as it is, or potentially, if we wanted to put some capex in, potentially looking at processing it. But it's not something we're looking at anytime soon. We're obviously focused on Bethania, and we don't want to get too distracted. We've got a huge opportunity there.
Okay, so that very much seems like kind of a one-off instance here generating that revenue, which filled the gap because you didn't have any of that toll milling going, but that is happening now. David, as we look ahead then, it seems like you're so close to this 100 tons per day initial goal, and it even says that it could happen early on in Q3 this year. So right now as we're talking, what still needs to be done? Explain what news we could look out for on the development front, or just simply what work you need to do at the Bethania project to get to this initial goal.
Yeah, so we already talked about the working phases being essentially prepared and ready to go. So that's obviously a big job already done. Then essentially the second part of that is, sort of connecting all the other pieces together so that we can move that much material out of the mine every day. So some of the things that we need to do now, like, over the next couple of months, are increasing the ventilation. So that's something that's ongoing right now. We need to hire more people. So there's continuing to hire more miners. There's some pieces of equipment we're adding underground, a second pneumatic shovel. And there's some other kind of underground infrastructure, a little storage area that we need to build underground as well. And then I think once those kind of four things are done, we should be ready to go with 100 tons per day. And it won't be like, and it won't be like a light switch where you're going from like 20 tons to 100. It'll be a gradual thing, but those are all the things we need to do in the meantime.
So you even mentioned that capital-wise, you're okay, even without that toll milling in Q2 to move the project and this development forward. The last time we chatted was regarding that silver royalty deal with Silver Crown Royalties. Just take us through the capital that I guess you have available to you and reiterate the fact for us that you're doing okay here.
Yeah, well, we're actually getting paid this month for the concentrate that we sold last month. So we're getting inflows of cash there from Silver Kings. We're getting inflows of cash right now because we're milling the Bethania stockpile and continuing to mine and mill in July here at $38 silver. So yeah, actually we're in great shape right now. We're very, very happy with how the balance sheet's looking and the fact that we're actually getting quite a lot of cash flow in right now, incoming, and obviously the royalty deal is kind of an interesting way because it'll give us some options to accelerate things even faster than we had planned. But even the status quo is looking pretty good for us right now.
All right, David, thank you very much for this update. Again, David Stein, President and CEO of Kuya Silver. I'll post a link to the company's website below this interview in the show notes so you can read over that news release. Send me any questions you have, and I'll touch base with David when we get some of the actual financial results and any other news from the company. David, thank you very much for the update today.
Okay, thank you, Corey.